All right, so basically, I've always said that um, for those of you that have been conversant with my YouTube channel and you've been seeing my videos, you will know it's the same thing I keep speaking about all the time. If you want to trade, you want to first of all find out the higher time frame structure. Okay, so what's the structure? What's the overall trend of the market? What's the bias? What's the order flow? It's the same thing. Okay, these are the first things you want to spot in any trade you intend to take. Once you're able to identify the structure correctly, the next thing you want to be able to identify is your current trading range. So trading range, by trading range, I'm talking about the most recent high. Okay, I've always said this. The most recent high and most recent low. Okay. Oh, didn't put that. So once you're able to identify this, the next thing you now begin to look for your OBs, order block. You can now start looking out for your fair value gaps, imbalances, IPAs, depending on whichever term you want to use to call them. Same thing, right? And then your bank levels, now want to begin to look at bank levels. Want to look at FIB levels too. Okay, but we'll buy below 50% at discount and then we sell at premium. Then for those that are in my mentorship community, we talk about a lower time frame entry. Okay, now why do we go all the way to lower time frame? To have a tighter stop loss and to have a higher risk, because that's the essence of trading. Lower your risk, lower your stop loss, have a higher win. So this is how a trade is. In fact, this is the first steps you want to take. So let's assume we are bullish. I don't know, I'm always bullish, so I love using bullish scenarios on my chart. So price is bullish, for instance. You have this price gives you an established range, and then you begin to see maybe stuff like this. So let's assume you came to the chart and this is what you saw. Okay, so we have an established range. You don't need much to know that this market is bullish. You don't need much, because price has created a low, and then you can see price created a high, and price seems to be retracing. So you're able to identify that, all right, this is bullish. Price is making highs. So even if price was here at this zone when you met price, it really doesn't matter. You need to consider where is price coming from and where is price going to. That's the order flow. What's the order flow? What's the price action? What is price really doing? So ability to spot this on higher time frame is what will have to give you a valid structure. If you cannot identify the structure on a higher time frame, you are most likely going to be wrong. So if you have this identified on the most highest time frame, so whether it's weekly, monthly, you just want to know what's the overall order flow of the market. So if I want to mark this out now, you need to know that this is within the range, because the next thing is your trading range. This is the most recent low and the most recent high. So even if I want to take, let's say, a sell entry from here down, I'm going to be looking at taking profit at this inducement that is here. So I want to do something like this. So I want to like take shots from here, maybe from a fair value gap somewhere, or an order block. My target will be this inducement that was created within the range, because this is within the range. This is not the low, neither is the high. This is the low, this is the high. So this is what I would love to focus on. So and that should give me like a 1 to 3. Then once price takes, and if you bring out your Fibonacci level, because the next thing after identify your most recent highs and lows, you want to be able to spot, okay, if I'm going to buy, I always want to buy at discount below 50%. I want to look for my entries below 50%. So you can see that from this low to this high, anything below here, that's when you want to look for buy. So price can take this out and price can give you that buy from here. Market is right. So I'm not going to be looking for buying opportunities at this zone. I see people, they try to buy from here. This okay, price has taken this out and then we want to buy from here. Maybe stop loss around this zone and they start taking profit to the high. No, you are wrong. We buy from the low, because even in ordinary market concepts, when prices are high, traders tend to sell. Yes. Buyers come into the market when prices are very low. They want to accumulate a lot of orders, and then when prices are high, you want to give out those orders, those positions. So you allow price to navigate low so I can trade this retracement, then allow price to come. Then the next thing is your order blocks, your fair value gaps, bank levels. Your bank level is any place below the 50%. So I'll be looking at maybe somewhere around here, 786, 886 sweep levels, and then just different zones. Or I'll be looking at this order block here for my buying opportunities. Okay, this is what I'll be looking at. Price should come to any of these zones. These materials are they're on my YouTube channel. All right, I've shared so many of them for free. They are there. If you can sit with those materials, I tell you, you will be profitable. You will do well. You really doesn't necessarily need you really doesn't need somebody else to. If you sit down with this stuff, you can always find a way around them. All right. So you allow price to come in here. Then for those in the mentorship community, you want to see a lower time frame entry where you will get a tighter stop loss like this. Let's say if you are buying, you want to buy from here, your stop loss will be at the lows, all right? The lows, below. That's where your stop loss will be. And then take profit to be at the high, the last high that was created. How about if price takes out the high and price keeps going? It really doesn't matter. All matters is that you've been able to achieve your target or proposed TP. You move from the low to the high, because we understand that this is the movement of the market. Price creates a low, creates a high, come back again, create all of these, create another high. These are price keep moving. So if I enter from here, I want to take full profit from here, or part of my profit from here, maybe 60-70% of my profit from this high. If price come here again, I get entry here, I want to take profit from this high. And then if price takes this high, come back low, here becomes my next area where I want to consider for take profit. That's how trading is. It's very simple and very difficult, because you need to wait. So price is around this zone, you want to start waiting for price until price comes to this zone. Remember the problem that we do have, we want to see, okay, how can I enter this place? In case price wants to keep pushing higher, you just want to buy from here, then you get kicked out. You enter again, you get kicked out. Then later you say it's not working, like it's not working, it's a scam. No, you are not patient. All right. So I think the next video I'm going to be dropping will be on risk management. I need to really speak on risk management I need to speak on how to have entry plan, exit plan. All right. So anticipate that video. And then if you are in this call, you have not subscribed to my channel, I think this is the right time for you to do that. Okay. So let me give room for just one question, and then um, I actually wanted to do trade analysis based, like we are not trading. So you have any question, unmute, ask a question.
Okay, good afternoon, sir.
Yeah, good afternoon, Mr. Chris.
Yes.
Is that Mr. Christopher?
James.
All right, Mr. James. Good afternoon.
Thank you. So, this is my first time of being on your call. I want to really appreciate you for this, what you are doing, giving back to the community. The question I want to ask is this. There are times when we have these strong highs and strong lows fail. And there are times when we have our trading range and everything looks good, but they fail. I wanted to just find out, are there some indices that you see that makes it a bit more higher probability apart from the liquidity that is generated within the trading range, or maybe on the higher time frame? Are there things that you see that make it more of a valid setup? Thank you, sir.
Okay. Yeah, thank you for that question. I think is a very honest question from somebody who is trading. You will discover that there are times these highs and these lows are violated. Okay, it happens. Most especially if you are taking your order flow from a lower time frame, like daily and like 4 hours. Okay. If
Yes, sir.
weekly is bearish, for instance, and daily is bullish, if you take your most recent range on the daily, you will think that price is bullish. But weekly is always going to control the daily. So weekly is going to blast. Okay, and then sometimes price can also may not even take out, may not completely violate. Price can, give you something like this because everything about the market is liquidity. So price can come, instead of retracing from here, price will weak out this low and price will still go bullish. And this is where the lower time frame comes into place. The lower time frame helps you to confirm, is an extra confirmation. So when I come here, I'm anticipating that I'm going to buy from here. I want to see price give me a confirmation entry to align with the higher time frame, because as price is bearish here, this retracement is bearish. Every retracement is opposite of the main trend. All right, so this retracement is bearish. I want to see price go bullish on this retracement. So I might be using a candlestick pattern of either a bullish engulfing or bearish engulfing. I might be using SMC entry where I want to see a break and retest. I might be using a trend line or indicator to confirm. Okay, all these methods, they work. But you need to look out for that confirmation entry within your zone, within your highs and your lows. And when you see that, you get it. Even if price takes you out, most of the times, from my own experience, price will give you 1 to 3, even if price wants to violate. So you can really not have 100% strategy. I think you just want to have higher win rates, and that is what the SMC and ICT, which we treat and trade in the mentorship community, that's what it does. It gives us, at least you have like 70 to 80% win rate. I think that's fair. If you're looking for a 100% win rate, there's no strategy like that. All right, trades will violate, and that's where risk management comes in. So I'll be dropping that video much later so that people can really know how to manage their trades, how to get entry and exit, and just different stuff I'm going to be speaking about. Yeah, I think that would be all. So let me have your
Thank you, sir.
questions and suggestions in the comments section.